Hello, everyone. Just waiting to see if we get a few more people sign in. We did have a reasonably large amount register, so just might give them another minute and then we'll get this started. Welcome and thank you for joining. I'm Shaun. You may have seen my head around on Instagram or in our EDMs. A few of you online have actually spoken to in the past and just recently as well. Great to see you online. Thanks for joining. We have at least one current client that's joining us, which is great to see as well. So thank you for joining in today. Yeah, we might just get it started so I'm not holding up everyone that's joined on time. So this session is about understanding WIP in plain English and learning how to use our BuilderCFO WIP template. Just some housekeeping. This is my first live webinar, so please forgive me if we have any technical hiccups. We will keep everyone on mute for the session. If you do have a question, you can pop it into the group chat for everyone to see, or send me a private message. I'll review and answer questions at the end of the session. So WIP, it stands for work in progress. So for builders, it helps answer one of the most important questions in the business. Does the work completed on a job site match the amount that has been claimed so far? This is not just an accounting exercise. WIP is a job health check. It helps identify whether a job is underclaimed, overclaimed, or broadly on track. I'll keep it simple. We'll go through the template and work through our BuilderCFO template and look at some simple worked examples, and then we'll talk about what action to take from the WIP result. The session should take about half an hour, depending on questions. It shouldn't take more than half an hour, but we've allowed for a bit more extra time in case we do go over. We'll start with explaining what WIP is and why builders need it. Then we'll walk through the template in order from job details through to WIP result. After that, we'll look at two simple examples, underclaimed job and overclaimed job, and we'll finish with questions and practical steps for anyone who wants to apply it to their own jobs. So first, let's simplify what WIP actually means. WIP shows whether work done on a job matches the amount claimed. There are three steps. First, we estimate the work done using actual costs compared to expected costs over the course of the job. This gives us the percentage of completion as far as the numbers are concerned. Second, we calculate the revenue earned based on the percentage of completion. Third, we compare that earned revenue to progress claims already issued. The difference is the WIP result, and I'll step this out further in later in the session. Why does this matter for builders? Builders need WIP because claims and costs don't always happen at the same time. Progress claims are often milestone based, so this is for a fixed contract, but costs hit the job every week. A job can look okay because invoices have been raised, but costs or forecast changes may show a different story. So your work in progress or your WIP helps identify margin pressure and cash flow pressure early, before a final claim or before the end of a job. One of the reasons WIP matters is it gives a truer picture of the job and the business. Recording WIP monthly gives you insight into cost control and cash flow forecasting, and provides a truer picture of the profit and loss and balance sheet. Without it, you're often relying on invoices, bank balance, or gut feel, which are all useful, but they don't always show whether work completed matches revenue recognized or claimed. WIP helps you answer the practical questions: are we underclaimed, overclaimed, losing margin, carrying unapproved variation costs, or heading into a cash flow squeeze? So let's get into the template, which hopefully makes calculating WIP easy. The template has been slightly modified for my clients that are looking at this. So I did admittedly chuck it into ChatGPT and ask ChatGPT to make this easier to read. And so it moved my variation column around and changed the colors, made them a little less aggressive. So the template works from left to right. First, we start with our job details and original budget in this green area. Then we move into our actual costs, forecasted changes into this yellow area. And finally, we enter in our invoices issued. Once those figures are entered, the template calculates the WIP result. It is important to note that the template is only as good as the data entered. So the current job costs and realistic forecasts are essential to make sure that we've got a correct WIP result. So now I'll walk you through each step. So step one is to tell the template what the job is expected to look like. This isn't new data that we're having to put together. This is simply our contract information and our BOQ or estimation data. So we start by just entering our job name or code. We enter in the job address. We then move on and enter in our contract value. Important to note with the template, we exclude GST from all of our figures, which is how Xero, MyOb report ex-GST. It's also how most project management reports the figures ex-GST. So this template is the same. All the figures that we enter in here are ex-GST. Also, from the template perspective, the only data we're entering are in our grey cells. Anything blank or coloured, no data has to be entered. So once we've entered in our contract value, we then enter in our budgeted subcontractor and material costs, or our supply and install costs in this column here. And finally, we enter in our budgeted direct wages. So that's our team costs and anything related to actually working on a project in particular. And that could be back of house in the office as well. The template will then calculate our original profit. So this should... Oh, sorry, I was on mute. I'll go back a step. Yeah, I was just saying, sorry, I accidentally got muted. Once we've entered in all of our original budget data, we should get our forecasted gross profit, which should align to our project management software. It also provides our margin and our markup percentages. So step two is where we tell the template what the job looks like today. At a minimum, this should be carried out at the end of each month. The reason for this is so we have some accurate performance reporting. So in our first column, we enter in our variations. And with our variations, this is variations that have been invoiced or billed to the client. We don't include variations that have just been discussed, agreed, or estimated. They have to be invoiced to the client. Same with our variation costs in the next column down. These are costs that we've actually incurred, not costs that we're estimating, unlike what we did in the first step with our budgeted figures. Just a side note on the variations. One common error we see with variations is if variation adds a delay to the job, most builders fail to add additional direct wages or job admin to cover that delay in completing the job. Even if you carry a higher margin on your variation, this can easily be eroded if you're not factoring in how much of a delay the variation can cause to the original contract. So once we've got our and normally the variation data we would have to pull from our project management software, because in our accounting software, it typically doesn't break up variations from our original contract and budgeted costs. So the next two columns are our direct costs. So direct costs and allocated wages to that job. I would typically pull this data, unlike variations, from our accounting software. And the reason for that is our accounting software is reconciled to bank accounts, which will therefore provide generally more accurate figures. It's harder to leave something out and get it wrong. For wages, to be able to record wages, you need to have timesheets or some sort of reliable allocation method in place. Most project management software have geofencing, which can talk to accounting software such as Xero to be able to allocate team members' time and cost to each job. And so they're the figures we enter in here. We can work around this if your business doesn't have timesheets yet, but ideally, if you want to get this right, you need to have timesheets and allocating costs to each job. Once all the direct costs are entered, the last field for each job that we want to enter are our known overruns and underruns. With this column here, and just to give you an example, for example, if in your original estimation you had allowed 20K to prepare a site and it ends up costing 15K, that 5K is an underrun or saving. It's important to record these underruns and overruns, as they will throw out the WIP percentage of completion. Because the template will think, so in this example, if we don't enter a negative 5,000, the template will think that that cost still needs to be incurred, and so therefore reduce the percentage of completion on the job. This section also helps the expected final gross profit on the job, because it'll adjust our cost to completion, which then moving into the next slide, adjusts our forecasted adjusted gross profit and adjusted margin and markup percentages as well. So it enables us to see if we're losing or gaining margin on the job. The final step as far as data to be entered is to enter in our invoices issued to date. This includes unpaid invoices because we're comparing completed work to claims issued, not just cash received. It also includes variations that have been invoiced. So it's the total invoice that we send to client. The template then calculates our percentage complete and calculates our WIP as a dollar result. The WIP as a dollar result is our adjustment to revenue earned or gross profit. So this is our percentage of completion, and this is our column for our dollar adjustment. The WIP percentage reflects the stage of the job is completed to. So for example, where we have 50%, this indicates that the build is 50% complete, regardless of the progress claims and invoices. It's where you can do a sanity check on the job. You're going to know if a site is about 50% complete. So this is where your gut feel kicks in. If you feel that it's incorrect, then it's an immediate indication that something is wrong, either with the data entered into the template or with the job costings. I don't have it in this snippet here, but positive dollar WIP. So where this spits out a positive number, this generally means that work is ahead of claims, meaning that you have earned more than you have claimed. When we get a negative number in here, so a negative dollar WIP, this means that our claims are ahead of our work completed. That may help with cash flow now, but it can create pressure later. We see negative WIP with 9 out of 10 jobs from all the builders that we work with, mainly due to contracts being front-loaded to cash flow a job. Where this can cause or normally causes trouble is when the funds from a new job are used to fund and or finish an existing job. Regardless of the WIP result, with each job being positive or negative, it should always lead to some action. So we'll look at 2 examples to show how the numbers can change the conversation, and also explain the difference between positive and negative WIP. So with example 1, we have a contract value of 500,000, our total expected cost of 400,000. So these 2 line items would be in if we go back to the template in our green area, they're our contract value and our budgeted cost to complete this job. Then moving into our yellow area, cost to date. For this example here, our cost to date are 200,000. So simply put, 200,000 divided by 400,000 is 50%. So it would suggest that we are on this job, we're 50% complete or halfway through the job. Based on that, the revenue that we have earned is 250,000, being 50% of our contract value. If we've issued 180,000 in invoices, the difference between what we've earned and what we've issued is 70,000, being a positive WIP. In this scenario, if we don't do a WIP adjustment, we're likely showing a smaller profit in our accounting software than we should. With example 2 and the opposite to positive with a negative WIP. So same contract value, 500,000, same expected or budgeted costs of 400,000. In this case, our costs to date are 120,000, which represent 30% of our total costs. So therefore suggests that this job is about 30% complete. 30% of our contract revenue is 150,000. So that's the revenue that we've earned to date as far as deliverables on this project. If we've issued progress claims of 220,000, this creates a negative WIP. So we've issued or we've overbilled as far as where the site's completed. In this scenario, we're likely showing a larger profit than we should. So yeah, same contract, very different message. Positive WIP, as far as actions to look at, positive WIP may mean we need to check whether a project claim can be raised, or review whether work has been billed correctly. When we have negative WIP, we need to be mindful of future cash flow. because technically we've got that cash sitting in our bank account to fund the balance of that project. We need to review whether the job is running ahead of claims. We need to make sure that our margin is still protected. Where we see a low margin, it may mean that we need to review our costs, ensure we haven't missed any variations or haven't, if there's any variations that need to be charged, and we need to adjust our forecasting. The key with is to build this into a simple monthly routine. The WIP process should be simple and repeatable. First, we want to update our costs and wages. Second, update our variations, including both value and cost. Third, forecast under and overruns. Fourth, enter our claims issued to date. And finally, take action. The action may be to raise a claim, review a margin, investigate costs, or just watch cash flow. The three things to remember with WIP is a job health check. Our WIP template needs to be current and have accurate data in it. And the results should lead to an action. If your WIP's not updated, the first issue is misleading gross profit. Looking back at the examples, where we could be under or over reporting profit. The job might look profitable when it's not, or a profitable job may look worse than it really is because costs and revenue are not matched properly. The second issue is bad pricing decisions. If you don't have accurate costs and profit information on completed jobs, future quotes may be based on wrong assumptions. The third issue is cash flow blind spots. A profit and loss can look strong, such as when we have a negative WIP, while cash is becoming tight. And this is because we've overbilled or failed to forecast what's still required to finish a job, and we've used that cash for other projects. The fourth issue is reporting risk. Negative WIP or overbilling, so it means invoicing is ahead of work completed, which creates a liability and can affect how revenue should be recognized under reporting standards. So as a practical message, WIP is not just an accounting adjustment. It's how you keep your job profit, claims, costs, and cash flow lined up before a problem appears. I think I got through that pretty quick. Hopefully I wasn't talking too quick. So we'll open to questions and check. I'll just go through and check if anything has come through. Give me one tick. Is WIP the same as cash flow? No. WIP is about whether work completed matches invoices issued. Cash flow is about money, when money is received or paid. They are connected, but they are not the same. Can WIP be calculated at a company level instead of a job level? If not, what if my job costs are not up to date? It can, but WIP should always be built up from job level first. And the reason for that is one job might be underclaimed by 80K. Another job might be overclaimed by 60K. So at a company level, that might only be a net WIP adjustment of 20K. So it potentially hides an issue. But also the WIP result won't be reliable. So the first step I would say is to make sure all your job costs, wages, and variations are current and traceable to a job. So yeah, practically, yeah, company level reporting isn't possible. Um, how often should I record WIP? So monthly is always a good starting point, but I always would also consider recording and updating your WIP template before a major claim, and also when a job materially changes. This just gives you the opportunity to discuss issues with your team or the client and make adjustments proactively if possible, if you can. Can WIP impact tax? Uh, yes, WIP can impact tax. Uh, I'll start. I'll start by answering. So most accountants treat builders WIP as like stock or inventory on hand, like a manufacturer would. Uh, builders WIP is not that. So the ATO's view is that long-term contracts can generally be returned using either a basic approach, where we're bringing progress or final invoices to account and deducting all the costs incurred, or a estimated approach, where we take the average profit over the life of the contract. A long-term contract from the ATO's perspective is a contract that extends beyond one financial year. And so that includes contracts that run for less than 12 months but cross over 2 financial years. So that's something I do see get wrong quite often when I review builders. As we enter the numbers in each, do they update the totals of each section? Yes, they should. So you only enter the grey areas. Do we add new data? So none of the totals, and Peter, we spoke this week. I'll send you the template first. I'm not sure you have the template yet, Peter, but maybe I'll touch base with you privately after this if you have time. Yeah. Is negative WIP bad? Not always. It may be normal depending on the contract and claim stages. And look, as I said earlier, most builders front load their contract to cash flow the job. It just needs to be understood because it can create cash flow pressure. Negative WIP is not automatically bad, but you need to know why it exists and what it means. I think that's it. If anyone else has any more questions. So just Peter, I will come back to you. Oh, sorry, Darwin, is positive WIP good? Again, similar to negative WIP, it depends, right? So positive WIP means that the builder is cash flowing the job. So if you've got the capital and the means to do so, then by all means. But obviously, positive WIP means we're also outlaying the funds before we receive them. So positive WIP generally sounds better, but it also carries risk, right? So positive, and one of the biggest risks with positive WIP is if you outlay the costs to bring a project to a stage and then you're not paid, or there's some sort of dispute. So it can create a negative outcome in that scenario as well. Most jobs, as I said, most jobs that I review, like 9 out of 10 of them, probably even more to be fair, are always running negative WIP until they sort of get to the end of the job. Yes, will I be sharing the recorded meeting and template? Yes, definitely we will be. As soon as the recording's available. As I said, this is my first webinar, so still ironing out a few kinks and bits and pieces. But yeah, the plan is to make this available to everyone that's joined today, and also send out the template. Okay, I think that's it with questions. Oh, wait, one more. Can can WIP show if a job is losing margin? So yeah, in the template, we've got our forecasted in the blue area. So just after we enter the direct costs, we've got our forecasted percentages or budget. So as if we're entering all the data correctly, if we have overruns, it's going to show that if we have overruns, or B, if our variations aren't producing the same margin as what we originally budgeted. So if we're doing our variation at this is crazy, but I know some builders do it at cost, it's going to bring our margin down on the job. And the template does forecast that as well. Cool. So practical takeaway, and I'm just going to get my last slide up there. So thank you for everyone for joining. For anyone that has joined the live webinar, I will sit down with you and work through a current job to calculate your WIP position. Condition does apply on that. To make it useful, you need to be using Xero or Mild with job tracking. If you don't have job tracking set up, I'm still happy to catch up with you and discuss best ways about setting job tracking up in your business. We also have 2 spots available in our Builder CFO program for July. The Builder CFO program is for builders who want regular support around WIP, cash flow, forecasting margins, and business performance. So just to reiterate, I will be sending everyone a copy of the WIP template. For my current clients, that template is the new. I've updated that template, so I'll send the new template to you as well. And once we've got the recording available, I'll be sending that around. The other very small ask that I have is that we are also sending a small survey. If you could please complete the survey, because it will help us plan for any potential future sessions we might hold. Feel free to use my booking link that Eureka's put into the chat, but also you can scan this QR code to set up a time with me to go through your WIP. Thank you everyone for joining. I apologize for my nerves. I was probably going a little bit too fast, first one. But yeah, the main message is keep it simple. WIP helps seize whether each job is underclaimed, overclaimed, or on track before it becomes a bigger marginal cash flow problem. Please reach out if you want some extra support, and enjoy the rest of your day. Thank you. Thanks, everyone.